down 177 points, and we're bringing in traders at the CME. Charlie in the newsroom once again. Scott Bauer, to you first. Give me a sense of what you're seeing, what the feeling is on the floor.
You know, it's obviously very quiet trade today, being a holiday. Not a lot of conviction, quite frankly, behind this. But, you know, to me, this is not just kind of the perfect storm with the Apple suppliers and, you know, that really dragging down the NASDAQ. It really is all about the dollar, Liz. And you know, the fact that 40% of all the S&P 500 companies gain their profits from outside of the U.S., that's where the scare is coming from here, because that is what people are really concerned about, that this is going to start eating into their profits. So to me, it's all about the dollar. Now, that being said, I don't necessarily believe the Brexit talks that are coming out. A couple weeks ago, we saw positive talks coming out. Dollar got hit, market rallied. Now we're kind of seeing the opposite. So if anyone says that the dollar is rallying just based off of, you know, what we're seeing come out of Brexit and what we're seeing with the euro and the pound, I don't buy that. But that is really what's spooking the market today, is this big move up on the upside in the dollar.
That is it. That's what we're seeing from a lot of the fast money out there. Phil Flynn, you give me your assessment here, and I find it very interesting that earlier the oil numbers were higher, the oil prices were higher. They could not hold on to any of the green in light of the fact that we did see the stronger dollar. Oil is denominated in dollars. It becomes more expensive.
Yeah, I mean, initially it looked like oil was going to try to shake it off. They were going to focus on the fact that OPEC was moving towards a major production cut.
Can I just interrupt, because I want to point this out. We have a lot of listeners on XM 113. Now oil is below $59 a barrel. We're at $58.96. We took a gap down in the aftermarket. Go ahead.
We sure did. And part of that was thanks to Donald Trump and his tweet machine. I mean, he came out and basically called out OPEC. I mean, OPEC overnight was saying, listen, Saudi Arabia said, we're not going to wait till December. We're going to reverse the cut that we gave to Donald Trump ahead of the Iranian sanctions that never happened on that oil. So they're going to take that off immediately off the market. Then it looked like OPEC was on the track to get another production cut of 1.4 million barrels come December. Donald Trump says, hey, wait a second, OPEC, you better not be cutting production. There's enough oil in the market. Prices should be lower, and we don't want you messing with this market. So it's really going to come down to, in oil, who are you going to listen to? Are you going to believe OPEC? Is OPEC going to kowtow to Donald Trump and not cut production like they're planning to? Or are they going to give in? And I think right now the market looks like it's going to give in. Okay. But you can't forget the fact, you know, when the stock market's selling off like it is, the dollar is rallying. It's hard for oil to stand up all on its own.
Charlie Gasparino, speaking of selling off, we are now at session lows. This is a fresh session low. Dow down 563 points to 25,428. Again, we are watching the Russell down 24, the NASDAQ, the S&P. Lots of red on the screen here, Charlie. And they're saying the dollar. President Trump said the Democrats. What's your third D here? Anything else you can imagine to blame?
I was just going to say GE is now flirting with $8 again to go below it. Just FYI, off the last story. Listen, long term, you got to ask yourself about the dollar, and that's going to have an impact on the markets. You know, if we have ballooning deficits, what does that mean for the dollar? And that actually means the dollar is going to get stronger, because you have to, in order to buy our debt, foreigners have to buy dollars. That's one of the reasons why we do have a strong dollar, because we run these massive deficits. And you know, if you think the Trump economic plan is going to work, which there's a lot of signs it is, and we get 3% plus GDP, well, we can pay down the deficit that way. If that corporate tax cut is not too efficient, if companies don't reinvest in plant and equipment and hire, and all they do is stock buybacks, well, guess what? We're not going to get sustained 3% plus GDP. And the deficit is going to get a lot larger, and then the dollar gets a lot stronger, and that hurts exports. So that's some of the stuff you have to look at long term. I mean, listen, we can play this all day long about.
We're down 603. Down 603 for the Dow Jones Industrials.
I guess I'm the kiss of death there.
Can we cut his mic?
Go for it.
Ashley, I'm looking at the big financials. Some of these have to have quite a bit to do at this very moment with the Dow coming down. I'm talking specifically about Goldman Sachs, Bank of America, which is down nearly 3%. Listen, all of them, whether they're Dow components or not, Wells Fargo, Citi, USB, PNC, BB&T, KeyBank, everybody's getting hammered here.
They are getting hammered, and I can feel it accelerating with less than 10 minutes now into the close, Liz. But you're absolutely right, and the financials have frustrated a lot of people. They were the standout sector, supposedly, of this year behind big tech. More money as interest rates rise, get more money back on your loans. Just hasn't worked out. Less regulation. There was another reason given for big financial companies to do very well this year. Just hasn't worked out. We pointed out that they're actually having to pay out more money for people who save money with them on interest payments. But certainly, financials have struggled to gain any ground for quite some time. I also want to mention, Liz, that yes, the bond market is closed, and you'd expect it to be a little quieter down here. Not really. By mid-afternoon, the volume was slightly above the year-to-date average, so quite active trading on a day you'd expect it to be a little quieter, which suggests some conviction. And I had, as I said earlier, I had one trader say to me, you know what, I just don't like this action. There's a lot of reasons why people will be cautious. I just don't like the feel of it right now.
Yeah, I can imagine. Scott, can you give me what you are looking at? I'm trying to find some green on the screen. There might be a few grocery names that are looking good. One healthcare name or two, J&J, looks somewhat in the green here. It's obviously very tough day for almost every sector.
It really is. I mean, all sectors are down today. And, you know, I think it's one of those days that, like Leslie just said, that there's just not a good feeling out there right now. So people are really just looking to grab anything that they can sell right now and then worry about it later. I mean, like you said, you see a J&J, I see a Molson Coors, you know, Tap, stock like that is up today. Other than that, it's red across the board, Liz, but let's see what happens in the next couple of days. Let's see what happens with the dollar and Brexit, because a new headline coming out of the Brexit talks can really just change that.
You know, let me read this right now, folks. The SEC chairman, Jay Clayton, the Securities and Exchange chairman, says the potential consequences of Brexit are understated. Scott, interpret that for me. Is he saying they're not a big deal, or is he saying we're understating them, they're going to be a lot worse?
I believe he's saying right now that they're going to be a lot worse.
That's what I
if
thought.
something doesn't happen, it is definitely going to be worse than what people have out there right now.
Yeah, and here's the second headline, guys. SEC Chair Jay Clayton says the SEC is sharpening its focus on corporate disclosures about risks associated with Brexit. So what the SEC, Charlie, you know about this stuff, what the SEC is in essence going to do, it appears, is ask some of the bigger companies here in the U.S., what's your exposure? Could it be systemic? Could there be contagion if there are problems with Brexit?
Well, you know, it's interesting. I got to know, getting to know Jay Clayton a little bit. He's a very smart guy, and he approaches the regulatory dynamic this way. It's a very consumer-oriented SEC. It's not an SEC that's going to sit there and run around and try to nail J.P. Morgan for doing something, you know, on trading. That doesn't mean they won't do it. That doesn't mean they won't focus on insider trading. But they're looking at very much consumer-oriented issues that affect pocketbooks of the average investor, and disclosure is one of those things. Like if you're a multinational company and you have exposure to the GE, are you telling investors exactly what your exposure is? Are you taking that into account so the average guy that wants to buy your stock knows what he's getting involved in? So this is like right in his wheelhouse. If he thinks Brexit is going to have a major impact on earnings of these companies, he wants them all on notice. If that's the case, you better disclose what it's like for the investors, because we don't want people buying your stock thinking that everything's A-OK when they're going to have surprises to the downside.
Well, better to protect investors, certainly. We are now down 632 points for the Dow Jones Industrials. We are seeing some real momentum to the downside. Let's bring in two more names. These are guys who buy and sell and get involved in these kinds of things. Greg Lucan of Lucan Investment Analytics has $1 billion in assets, and we are joined by Alan Rechtschaffen as well. Alan, give me your sense of a day like this. You're always kind of upbeat and optimistic about holding on to stocks even through tough times. This is a pretty tough time.
Yeah, what we have to fear is fear itself. And if you have a shift to focusing on vulnerabilities, you can have markets react this way. And that can build on itself. So when you look at all the things that are going on, if you focus on the problems, this is what can happen. And you can have a real shift in the market atmosphere.
Well, Greg Lucan, on a day like this, what are you doing? What are you saying to your clients? What is your activity?
I think the advice to focus on your vulnerabilities is great advice. Thanks for having me on, Liz.
Sure.
Good to be with you. So looking at those sectors or those stocks that have been down heavily already this year, some of them aren't down heavily today, but going into the end of the year, we're likely to see kind of an avalanche, a herd effect into tax loss selling. So those names that have been hit harder, some of the industrials, those kind of names, the home builders are likely to get hit even harder. And that may present some opportunities when it's time to do some last-minute Christmas shopping,
Well,
but not yet.
I'm glad you just put that into perspective here. And Alan, as we look at what is cheaper today, people were upset that Apple was too expensive at $200+. Well, it's certainly cheaper today, and in fact, it's down another 4 or 5%. Is that something where you would say, look, find what you love, what you have loved but felt was too expensive, and scoop up a little?
I mean, I think there's a concern about leadership. We have to find a place where the value stocks take over. And when you have a sell-off like this, and you also have value stocks going down, you have oil prices going down, it can be concerning. But the fact of the matter is the economy, the backdrop of this economy is extremely good. That can shift if the players in the economy, us, if we don't feel good, we can be self-fulfilling. And there's a lot of vulnerabilities, including the politics that you described before, and including a number of other factors that can change the animal spirits to not be as positive as they have been.
Uh-oh, what's going on at UBS when Alan's, because Alan always has a smile and says, yay. I listened to this because, Scott Bauer, it looks like we might close at the lows of the session, and it has been an ugly session all hour long, but right now we're down about 616, not quite there yet.
Well, you know, the last 3 weeks, last 4 weeks, Liz, it's been that last hour of the day that really has, you know, been kind of the telltale. And today, you know, it's nobody, or at least the traders that are here today, they don't want to go home anywhere near long today. And in fact, are actually taking some short positions. Good, bad, or indifferent. That's what's going on right now. And I think that there's so much, again, some contagion fear out there. The risk of what's going on with Brexit. Yeah. And then, you know, what just came out from Jay Clayton as well, that certainly doesn't help the situation. It does help at the fact that he wants the disclosure, then that's a great thing. But it definitely adds some fear to this marketplace right now. Greg,
one of the names that you like is cheaper right now, and that is Amazon. Would you be scooping up some here?
I would. When you look at the NASDAQ 100, those big companies, Amazon, Alphabet, Facebook, Google.
Okay, thanks.
They're down close to their 200-day moving average. This is a great place to pick them up.
We'll finish with Charlie Gasparino. Charlie, we're about to hear that closing bell. What do you glean from a session like this?
I don't think we should glean too much. I mean, this is a day trade. It's a market puke on existential factors that, by the way, that may not be back tomorrow. I mean, we'll be on a different narrative. I think the bigger issues are: do the tax going forward? Do the tax cuts work? Do deficits blow out? And if they do, we're getting higher interest rates, and we are going to get the dollar's going to go up.
Charlie, I hate to break it to you, General Electric, $7.99 on the trade, just passing on the ticker right now.
Well, that's us. That's our story.
Well, $7.99 for GE, below $8.